StockTwits Nation. It is Tuesday, March 25th. I'm here with Shay Boloor. As always, we have a lot to cover today. IPO market's kind of heating up. We got more tariff back and forth. But I think the most important story of all is this group chat thing, which has nothing to do with business, but I feel like it needs to be addressed. Shay, have you ever put somebody in the wrong group chat, especially sharing sensitive info?
Yes, and I've done that at work where I looked at a teammate to see who's underneath that teammate because I was forgetting that person's name, and then I accidentally said what I was going to say in the group chat to that individual,
Oh
and it was a
no.
reorganization of the team, and I was just like he started freaking out. It was a bad combination, but yeah, I mean that is something I'm scared of for sure. Of just saying something to the wrong
So I
person.
don't, okay, so this is like my brain goes. I'm like, how does this happen? Is it like this, the reporter maybe wasn't saved as his name and they added someone with like a DC area code they thought was someone else? Or did they just type his name in? Like, how does this even happen? Like, this is what's like, I've been thinking about this for way too long. Like,
This is the first time I'm hearing about this. What
wait,
happened?
what?
Yeah,
Oh, sorry. Wow,
this happened
sorry to
yesterday.
you actually you responded very well. I don't know where you've been. Probably following the stock market very closely, but Pete Hegseth accidentally leaked some military plans in a group chat, but then he had added the editor of the Atlantic. So there's an Atlantic piece that came out and was like, yo, I like accidentally got in this group chat with like JD Vance and all these other people, and they were like, and it was called like Houthi small group. Like they named it, like it was insane.
I can't
Uh,
really text that stuff to each other.
it's
It's
a
not like on
signal
Teams or anything. That's
apparently.
crazy.
Yeah, I'm like, why did he leave the chat? I would have stayed longer. But yeah, it's a big deal. My group chat is saying that they did that on purpose and it was planned and they wanted to like soft leak what they were doing.
Ooh, 4D. That's some 4D vision. That'd be interesting.
I know. So
Huh.
I don't know. Let's move over to the markets, but that's just a PSA to stay safe out there, people. Especially Instagram too. You think you're gonna send one thing to multiple people, and next thing you know, you got a group chat, which nobody wants. But over to the markets, things are looking pretty steady today. Shai, what are you seeing so far as we near the opening bell?
Some follow through, which is great to see because yesterday, pre-market, I mentioned like SPY's above the 200-day moving average. QQ is not there yet, so I'm somewhat defensive still. They had an explosive day yesterday, and the beauty of it was there was no intraday fade. It was consistently strong throughout the day, and now we're above the 200-day on all major indices but the IWM. So I think that now my defense trigger is removed. I think we've recovered. I'm not fully diluting my cash position and getting to the market, but I just think right now that we're gonna have a bounce rally, and I think that I woke up in the middle of the night and the market at the futures are red, like 0.3, 0.4%. Oof. So now we're probably going to retest the 200 moving averages potentially this morning. Green. Like I think we're going to have a follow through continuation, and it's a classic example of like what's being priced into the market when we had that correction and how much is being priced in. And there is nobody really knows what's being priced in on tariffs. Like, is I'm underwriting a really weak Q1 earnings season. Like, it's going to be pretty poor. Maybe that's being priced in as well, where earnings season, people are going to be guiding lights. It's going to be an echo of what the previous earnings cycle was, which I don't think was that great. And now we're assuming like Trump's like reiterating like the tariffs won't be as bad as a lot of people anticipate. It won't be as broad across the industries. So now everyone overdid on the sell side. Now they're recovering a bit. I just don't think. I think there's a lot more people on the sidelines still. I think my buddy Logical Thesis on Twitter, like he mentioned, like this might be the most hated rally we're about to experience because the macro has not changed at all.
The most
However,
heated or the most hated?
most hated because a
Hated.
lot of people
Okay.
are on the sidelines still because the macro is still very noisy. Tariffs are still there somewhat. So like people are just waiting on the sidelines. But we recovered 4 or 5% in a matter of a couple of days in the market, and now SPY is like 2% below their all-time highs. That doesn't feel like we're only 2% away from all-time highs. And I gotta say, like, most bullish action is we pull back correction, bounce off the 200-day essentially because we're above it after just like 1 or 2 days below it, retest the all-time highs and get new all-time highs. That's a new leg up. I don't think we'll
Yeah.
get there, but it's great to see it fall through today.
So what you said you're still defensive. What do you need to see or what needs to happen for that for you to go out of neutral?
I think a detox period isn't a couple weeks. Like I think a detox period is half a year. I think they failed in a sense where they were doing all these moves to force the Fed's hand, force the interest rates to go lower. That has not happened. It's failed. Like if that was their initiative, it has failed, and all it did is create pain for no reason in the market. Pain in the market. People lost money. So I think they're still going to reiterate like they're going to do some new plan to force the Fed's hand or force interest rates to go lower. And I don't know what that's going to be. If it's going to be more retaliations from the East or neighboring countries, and then they have to do even more. Like I don't know what it's going to be, but either way, they want Fed to cut rates. And this past month really didn't do anything to push them towards that.
Yeah, I think the word is just confusion, especially in the trade front. We had the walk back over the weekend, and then yesterday, reiterating, well, auto's coming soon, pharma, and so it's kind of these like half-baked statements that move things tremendously, and I don't know if people know really what to make sense of. I also saw there was a bunch of business leaders headed to China soon for a summit there. I think people are just trying to make sense of what's going on. But to your point, it's all on the whim of a few statements here and there, it seems. Are there other factors at play other than tariff rumors that you think, or is that the main reason why we're seeing this back and forth?
I think that's the main reason we're seeing this back and forth. I just think it's a show again, but unfortunately, even if it's a reality TV show, it's coming at the expense of investors, consumers, and that impact is very real. Even though everything they're doing is fake, the impact is very real. So I don't know. Maybe I'm just being a pessimist. Who knows? I will say like the past 2 years in the stock market rally, the way we've been rallying, I do. It just feels like this will be a dead year, which is great. Like I think we just need that. Um, I before the year started, I underwrote a 5 to 8% market gain this year for the indices. We're still in red. We're negative. First quarter is about to be over, and also you need to call out like this is the last week of Q1. There's fudgery that occurs on positioning across like a lot of the algos, funds. Like it's just covering on the option chain. Like there's a lot of outside noise that happens on the last week of every quarter, and I don't know if this is that, especially when the positioning has been so bearish this month. So I don't know. I'm just waiting pause period, and I I don't feel the urgency. Like I still have 2021 in my brain where like I really outperformed in 23 and 24, and I just want to hold those gains and be cautious and just build my cash position. And if the VIX hits a 14 handle in next week or two, like I'm gonna probably buy some September hedges, just because hedging would be cheap then, but only like 1% position probably in that just to protect myself, because I don't think the story's changed much in this poker game we're playing, and wanted to capitalize on hedging being cheap.
Yeah, I don't think you sound pessimistic. I think you're just like we're just tired. Like pick pick strategy, pick side, pick anything. Just but it is all of the confusion is causing some paralysis. Something that's less paralyzed than has been in the past is the IPO market. So we had some interesting IPOs come out last night. eToro, which is a popular global retail brokerage, filing their F1 to go public. They have about 30 million customers worldwide, much larger globally than in the US. Some interesting nuggets there. They saw a huge revenue boost year over year due primarily to crypto. Long list of underwriters here. Shay, what do you make of this? Do you think, looking at like a Coinbase, looking at a Robinhood, how much space is there for other players? And do you see eToro is fundamentally different than a Robinhood, or is it a similar play?
Tomato, tomato. I think the fintech industry is just highly competitive. That's why I'm a thematic investor, and I see what Robinhood has been doing the past year or two, but I haven't really participated because I just don't like that space. I think fintech's highly competitive, low margins. They're cannibalizing each other's take rate because like, what's their differentiation between one another? It's it's not nothing really. Like, it's a commodity of a business.
Yeah.
They're trying to own as many eyeballs as possible. So the reason Robinhood's like built different is because their UI experience created a moat, and now they're transforming into this like kind of a media company with within their financial ecosystem, and that's they're just capitalizing really every couple months, which is great to see. eToro, I mean, like you asked like about Coinbase, eToro, like there's dozens in the private markets very similar to them, and they're probably going to go public as well. And I think where's the urgency to get into eToro's IPO right now? Like, what is it? Is it crypto because crypto's taking off? Fine, but like there's better vehicles to capture that alpha elsewhere. Like, why sell your Coinbase position to buy eToro? That's like end of the day. Ask that question.
Yeah.
I don't think there is one.
Yeah, I sometimes try to wrap my head around. I used to work at a brokerage, and it's almost like it's a storefront of assets you can buy. And the difference between like retail and the brokerage is pretty much everyone sells the same things. So, you can buy crypto, you can buy stocks, you could do a Roth, you can T-bills. Like a lot of the platforms have a lot of the same products, the same tickers. And so it is when you think about it, is it like akin to department stores, retailers? Like what is the differentiator and what is the moat? Is it being the biggest? There's a lot of commentary around Coinbase making very aggressive moves to sort of own the institutional path. And so maybe that's where they're doubling down, and there's room for like a new consumer crypto brokerage. But that's where I'm trying to wrap my head around of like how many of these people could fit given how big the TAM is probably going to be. Um, because there's so many, and all of them have so many users. It's just there's so many people investing.
S Like, yeah, I mean, there's just so many. It's kind of crazy. Like, you have to ask yourself, what's the runway, really? What could it be? Like, and I think that I don't know. There's an appetite for IPOs, but I don't know if these kind of companies like the Klarnas, the eToros are where the appetite's going to be met. Like, I don't think that supply is going to be met with the demand that a lot of people have for IPOs. Um, so it'd be a great pulse check, to be honest, because like it's like these are tier three IPOs, to be on. Like, it's not that great of a companies to go public. If there's demand for these tier three names, maybe finally we'll get some tier one and tier twos. Like, everyone and their mother's been waiting for Databricks and
Yeah.
SpaceX. Those are the two golden gooses of IPOs that everyone wants exposure in. Will this be the precursor of like, wow, the demand's really there in IPO markets that
Mhm.
eToro and Klarna like are doing well, and even CoreWeave is going to be doing well potentially. We'll see, but that might be like the all right. It's safe to go IPO. Let's do it.
Yeah, I want to stay on IPOs, but you brought up Databricks. It's something I meant to ask you about yesterday was this partnership or deal between Palantir and them. I don't know if you read about this, but they have a deal with Palantir, right? And so, like, is that one where that's a strategic partnership in the long term, or how do you see those two playing together as someone who invests in Palantir?
Yeah.
Or is that
So
purely like a commercial deal?
no. It's a pretty big deal because I think another. So I think there's an acceleration happening on enterprise AI, clearly, and especially there's going to be a pretty big realignment in the data platform space. Like, there's no longer the battle. It's not about just structuring query execution or static data warehousing. Like, it's all about the ability to process, analyze, act on real time data, becoming the next frontier of this like future of enterprise intelligence. And Databricks, like during that like I think during their a couple weeks ago, they also announced a deep integration with Confluent, and they're the company behind Apache, like Kafka. Like, that's the streaming data. open source product that everyone in the Fortune 500 uses. So I do think that like the Palantir kind of pairing up with the machine like learning data lake company is somewhat of a match made in heaven. Like I wouldn't be surprised if we see a Snowflake and Palantir kind of pair up in the future, and that would be great to see because there's a sibling rivalry for sure between Palantir and Databricks. I mean, not Databricks, Snowflake shareholders because Snowflake was this darling IP. Like they're both in large data analytics, totally different segments of large data analytics, but they're both in it. So people pair them with each other all the time. But Snowflake went public as this darling IPO. It was trading at 200 times price of sales. Everyone's like, they are the IPO to own. It's been one of the hottest ones in quite some time. And they're priced accordingly, premium valuation. Palantir had to deal with a totally different narrative change where black box consulting company the government uses, nobody can trust, nobody can understand it. It's too good to be true what they're pitching. They're shilling malware. Snowflake was this golden child. So now you see over the past couple of years, like who is a real AI play? The narrative changed from Palantir was black box government consulting company to the operating system of AI, where Snowflake was this data warehouse like gem of data is about to explode due to cloud consumption and maybe AI to now like, oh, AI might cannibalize us. And they had to transfer their narrative from the hot person at school to like, oof, maybe peak, but now having a second win to become that enterprise AI player. So like I think Palantir was always slighted. Palantir shareholders were always slighted on like why does Snowflake deserve a premium valuation, but we don't? Like we have a better offering in AI, and they had to work their way to get to where Snowflake was just gifted it at IPO. So I will love that partnership because like I've been having to defend why they're different, and both of those names are top five positions for me. But yeah, I think to go off of your point, like Palantir is just so agnostic in AI that they can really partner up with anyone.
Yeah.
Doesn't matter who wins the LLM arm race. Everyone will. They're LLM agnostic. Doesn't matter what data warehouse company, data lake company you are. They can partner up with you because that's what an operating system does. That's why I call them the operating system of AI because everyone, any application, any will pair up with them because they are the OS.
Who
So
goes head to head with a Palant? Like who's their most commonly referenced comp in terms of what they
you know,
do?
they don't really have one. I mean, you can make the argument that the commercial space is Microsoft,
Okay.
just because like they're the legacy operating system where Teams, Outlook, PowerPoint. Like just think about it, like if you're an enterprise, you use the Microsoft suites,
Yeah.
but the jury is still out there on if Microsoft offers the intelligence needed now in the enterprise space in the post AI world, and that's why there was an opening for Palantir's AIP to kind of gain the momentum they did so quickly after their boot camps a year and a half ago because Microsoft didn't add that intelligence layer needed for enterprises. That was Palantir, and that's why Palantir is kind of eating some of that enterprise space where I don't know, maybe Microsoft should have tackled that more and stop focusing all their energy towards LLM with OpenAI or even Copilot, because Copilot, to be honest, has not been a wow moment, which I thought it would be. So like Palantir just became a mega cap because of that. They're adding the intelligence layer. So
Yeah.
yeah, I mean that's why they have a monopoly, and that's why the market's premium assigning 100 times free cash flow multiple to Palantir.
Yeah. Interesting. And then hopping back to IPO, let's talk about CoreWeave. This is a Nvidia backed, sorry, Nvidia. Nvidia. I always say that wrong. Sorry, Max. Nvidia backed company. They plan to raise $2.7 billion this Friday. They had a 700% revenue spike. So these guys rent out supercomputers. So sort of like renting out high-end tools, they help companies scale their AI fast. So rent versus build model looks like, and just helps people muscle up to build AI apps quickly. Thoughts on CoreWeave, Shy? Is this the type of IPO that you think people will have an appetite for relative to Klarna, StubHub, eToro.
Uh, I think so, but I'm not interested in the company at all because I'll tell you why. So
Okay.
I think everything CoreWeave is doing everything that Wall Street will love. Like they're capitalizing on this GPU crave craze that we're in right now, and they're going public at a 30 billion valuation when they were just making like $200 million last year. Now they're making $2 billion. No, sorry, $200 million in 2023. Now they're making 2 bill in 2024, and I think like that's obviously eye-popping revenue growth. They're capitalizing on the AI infrastructure phase uh, with their tight relationship with Nvidia, and the story that they're pitching is that they're turning to the fourth hyperscaler essentially. But when you peel back the layers, like it's not looking like that at all. They're looking like a capital intensive GPU flipping middleman, hoping to hold on to its moment in this AI infrastructure craze before the economics catch up. Because guess what? They're burning a lot of capital. And I think there's a big customer risk associated with them where I think 60% of their revenues from Microsoft. We got some pre-read just last quarter that Microsoft's capex is kind of plateauing a bit. So if that's the beginning of something more substantial in the coming quarters, like CoreWeave is going to be experiencing the bulk of that with 60% of their revenue on just Microsoft alone. So
Hmm.
that's part A of like, oof, that's pretty risky. And also like they're kind of that the like saddled with enormous fixed obligations that their supplier dependency is on Nvidia again, high concentration demand from Microsoft. It just feels like they're the epitome of a they're not a broker, but they're a middleman due to Nvidia and Microsoft. So like why own them? At the end of the day, at a 30 bill valuation when if Nvidia or Microsoft decides to do something more self-interesting on their end that's going to hurt CoreWeave, like CoreWeave is going to be a down it's going to be a dud because they're not profitable right now either. So I think
Yeah.
that's
Shy,
uh
who at CoreWeave hurt you? This is they're on your shit list. I love the breakdown though. I wasn't expecting you to know to like this deep. This is great. Keep going. Um,
no, I
I wanted to
mean
just say though, you're usually very like level and you're just like, no interest, not for me. It's just not your thing. I
no, I
respect
mean
it.
yeah, I mean I call BS when I see it and this is like a very big BS like IPO. First off, like they had to cut their valuation, I think like 30 or 40% since a couple, like 2 months ago, just to get the IPO, this company out the IPO door. That's not a good sign. Like this
Hmm.
is undersubscribed a bit on valuation wise. And I do think to go off of your point, like I'm not, I just, I think a lot of people are hoping this is like the next hot IPO. And I think a lot of people are going to be holding the bag on that. And I want to
Hmm.
make sure like they're aware of like the risk because when there's any kind of IPO, people get super excited. It's always natural, especially when we've had a dud of a couple years in the IPO season. But CoreWeave is it's not a developer first company. It's an infra first operator. That's a middleman, and they aren't going to be like a Snowflake. They're not going to be like a Palantir in the space. Their free cash flow last year is negative. Um, there is like end of the day, like you have to think about like the large cloud players, like the Amazons, the Microsoft, the Googles, like they already offer similar GPU infrastructure, and now they're also rolling out their own proprietary chips to reduce their reliance on Nvidia. So like all the headwinds that Nvidia is experiencing right now, because the headwinds are essentially people view them as a hardware company, but really they're not anymore. But people, that's a FUD around Nvidia. If that's a FUD around Nvidia, what do you think is going to happen at CoreWeave? Because they're solely relying on the supply from Nvidia. So like they're
Yeah.
it's just a bad combination, and it feels like they're going to be just another VPS company that is going to have a fancy veneer. Like it's just I just don't see it at all, and I think there is going to be like something of they're going to be. I think that going public, TLDR of all this, guys, going public with a high customer concentration risk with Microsoft, extreme capex needs, so negative free cash flow, and they really don't see a long-term differentiation on what they're going to do past the hardware phase of AI. I think if demand holds, like they might have time to layer on real value and have profitability catch up. But if it doesn't, which it seems like the hardware spend might be plateauing a bit, they're gonna be stuck finding themselves between the giants with falling prices, underutilized infrastructure, and evaluation that just seems they'll never get back to. And we'll see. But I don't think
Yeah.
there's anything special about CoreWeave.
I think you were getting at something, which was we've had this sort of IPO drought, and people are just thirsty for IPOs right now. I think we have a chart from Renaissance IPO, but so far this year, there's been 44 IPOs priced. That's an over 60% increase year over year. 64 filed. That's up 28% year over year. We've referenced Klarna, eToro, CoreWeave, StubHub also getting into the action as well. And I think, yeah, and in the retail world, we like shiny new things. A lot of these are consumer brands that we're familiar with, but I think you have a good caution to dig into these opportunities and don't fall victim to the drought that has been there, and don't jump at the first shiny thing you see necessarily unless you have some pretty strong conviction. Shy, when Howard was on here, he had, I mean, the state of the markets was a bit different. Was it last week? It felt like a month ago. He was talking about some concerns about the IPO market slowing down a bit. But if things progress as they are last few days, do you think more of these are gonna be announced and come out?
I think the low-hanging fruit ones are like again the tier threes. Maybe core. I give CoreWeave a tier two, but they're a tier two company. But really, I just told you they're a middleman, so like really not that great.
What do you give
But
StubHub?
StubHub's interesting. The only issue with StubHub is the consumer recession. If that becomes more momentum, like StubHub is going to be destroyed. Destroyed. That's the epitome of discretionary spend is StubHub. Um,
I also
I
feel like they live and die. Like there's waves of who's touring. Because I think it's like feast. I think I read it's like feast or famine with consumer spend on concerts, where like you will blow your entire month rent on Beyonce, but like you're gonna skip the other five. And so the mega stars are still bringing in a lot, but it's like this long tail that's suffering when people are cutting back. Um, but yeah, this article is showing they spend half of their revenue on sales and marketing. That shocked me because I I don't know. I feel like they already have brand awareness. It's basically, StubHub is basically a word you use to get tickets. So that's shocking as well.
I mean, the reason it's not as shocking to me is because like I think that's a very big commodity of the space. Again, it's not degeneracy, but it's kind of the same. It's a cousin to degeneracy where you're not loyal. You just want the best buck for the ticket to
Hmm.
go see your star. Like you could care less where you get it from. You just want it to be legal and trustworthy.
Hmm.
I think there's a lot of trustworthy alternatives to StubHub. So end of the day, you have to ask yourself like, what makes that specifically special, StubHub? I have a hard time seeing it. I really
Yeah.
do because, and that's why you're seeing half their money being spent on sales and marketing because they have to convince people to come on their platform. That's not.
Yeah.
I don't see any kind of pathway for margin expansion for them because they don't have a sticky ecosystem like I just called out. They don't have really a defensible moat because they're a commodity of in a commodity industry. That's where like it's really important to see through these see through this noise and ask like, okay, what makes each company actually special? And they have a platform, sure, but like there's no differentiation between them and the next three or four on that list.
Yeah. SeatGeek, Vivid. There is the opening bell, which also means we have our very special guest joining momentarily, who is Austin Hankwitz, which is a familiar face here on StockTwits and across the internet. Austin, what's up? Good to see you, bud.
How's it going? I was just watching you guys talk about StubHub here.
Oh, you
I
got
totally agree.
thoughts?
Shy, StubHub, I feel like is just, man, I mean, like, I've used StubHub, I've used SeatGeeks, I've used everything under the sun to try and find the best deal, right? I am loyal to the best deal, not the company who's gonna try and sell me whatever platform they think I should use here. So yeah, as long as I'm buying something that's legit and it's cheaper than the competition, I'm gonna go buy that.
You have any thoughts on eToro, Austin? As you were listening in.
No, I think I might have missed that part.
Okay.
No, y'all were talking about. I think it was CoreWeave. You guys were
Okay.
talking about when I joined there. But dude, so excited. How's it going,
I
Katie?
know. Shy, do you know Austin and I used to have a show together?
Whoa, I feel like a third wheel now.
Yeah, reunion. I got to shout out Austin because my first like podcasting, Austin was my co-host and he was the best co-host. He used to like sing EDM music before the show and lots of other fun things. So Austin's my podcasting Sherpa. And we're
I'll
back.
take it. I'll take it. We're back. We are back,
Well,
and
I
there's
didn't think the
so
clap
much
was gonna be
to
like
get
that.
excited
But
about.
yeah.
Shy, I bet you are just thrilled right now about market action. I wore my green shirt again. Every time I come on here, I wear a
Nice.
green shirt to hopefully get the markets green, moving in the right direction. Um, and we were talking a lot last time, and looks like the markets are green at the moment. Not sure if yeah, I'm seeing the Nasdaq's up 15 bips, the S&P's up 16 bips, the Dow Jones up about 7. Bitcoin is relatively hanging in there around the 87,700 range. Um, I'm optimistic, right? But Shy, tell me what's going on, man. Are you feeling good? You feeling you kind of riding the wave right now and waiting I'm in a wait and see moment, and I'll be happy to dig into the details there, but I'd love to get your thoughts on the markets as well.
Yeah, I'm totally on the same boat as you. I said it at the beginning of this call, this stream, where like I'm not defensive anymore because we bounce above the 200-day moving averages on both indices, but I have zero urgency to
Mm,
kind of re- start taking my soldiers from my 8% cash position because I even when the pullback last week, like I didn't feel an urgency that there are great deals out there on like high conviction names. Like Palantir didn't even hit 60s. Cloudflare didn't even break below 100. CrowdStrike didn't break below the 300. Like that pullback we experienced, it wasn't screaming buying opportunity either. So I was hoping that we were getting closer and closer to the capitulation where fire sales happen. August 2024,
yeah.
fire sales were happening from the yen carry trade crisis. The, the VIX barely breaking above 30. It felt very mechanical, this pullback, due to it was tariff related, but it felt very mechanical. Wasn't as
Hmm.
fear driven as you would assume. And I just wanted more pain, so I can capitalize on the deals. And now, I mean, I don't know. Axon didn't even break up below 500. Like I had a list of names like I wanted to add for my cash position, and we just didn't even get there. And now we're bouncing and rallying. And I'm like, great. So now I'm just gonna be raising cash position because I don't really want to participate as much in this market environment because the noise hasn't changed too much. It's still there.
Yeah, so for me, I'm right there with you. From a technical like market structure perspective, we saw yesterday the S&P 500 closed above its 200-day moving average, and as we all know, it's a super important moving average. Reason I say that is like the age-old adage is like nothing good happens below the 200-day moving average for a stock. And so as you think about like stage analysis and the S&P and different, I mean, if it's below the 200-day moving average, you're either getting ready for a larger sell-off or you're down there for a little bit before you bounce back up. But we closed above it yesterday, which is great. And in my opinion, I think we'll continue to see some momentum over the coming weeks, days and weeks, right? Hopefully, we begin to trend a lot closer to 5,800, 5,900, 6,000 or so with the S&P 500 before the main event, which is, are we going to put in a new all-time high or are we going to put in a lower high, right? If we put
Hmm.
in a lower high and then we go and retest that 200-day moving average, and we use it as support and and when we bounce back up, then maybe there's more to the story. If we use it as, we retest it again and we can't hold the 200-day moving average, maybe it's time to get more defensive, as you were talking about there, Shy. Um, I'm right there with you. I think right now is one of those like wait and see, right? Are we going to be back to the races? If so, I want to have clear confirmation we're back to the races before I'm actually, getting aggressive again in my portfolio. Or are we going to see a break below the 200-day moving average? And if that happens, I'd love to see that be confirmed so I can either get one, more defensive, or two, have a watch list of 5, 7, 10, 12 names of stocks that I'm excited to buy at 50% their current prices.
So So I think you brought up a great point as well. And like because we're so in the middle, like I do look for pre reads on what the next move is going to happen. Keith, if you want to bring in Nvidia's chart right now, Nvidia's showing clear weakness right at the gate, 6 minutes into the market, where QQQ and SPY's green. Nvidia just broke 120 again. Like that's
Wow.
the level it needs to stay above 200-day moving
Oh,
average, huge volume shelf. It's showing clear weakness right from the gate. So now I'm like, is the market going to reverse course now? Go
I
red.
think, I mean, I'm not gonna, just make some crazy ideas here, but um, if Nvidia is showing weakness, then yeah, I'd argue the market today will follow.
I agree as well, and I think we're going to test those 200 moving averages that maybe we cleared with a breeze. Yes, not SPY. SPY's way above. I'm saying QQQ. Like QQQ is at yeah. Okay, market's about to go red now, so they did follow suit. But 490 is a big level for QQQ. So I want to see if we retest that. Maybe that's like the higher low key check mark on the moving average, and we bounce, and we can maybe retest those previous highs, or is this what Austin's talking about, where we just got a lower high and we might just be king? This might be a bull trap. I don't know. I just know Nvidia's that 120 level is they're sitting on it, and it's just like waiting for the next like everyone's waiting for the next signal of like what's the next move.
Well, I will say too, I am using this opportunity, and Katie would love to get your perspective on this. I am using this opportunity above the 200-day moving average as a sell the rip opportunity, right? I've got all
Mm.
these names that I'm sure everyone here has heard of in their own portfolios, right? I'm sitting on 200, 300, 400, some instances 500% profits on things like hymns and all these other CrowdStrike and Cloudflare and like all these incredible things that we got into at the bottom of the markets back in 22 and in 23
Mm-hmm.
that I'm up big on. And so what I'm doing now is like, okay, I didn't panic sell the other week whenever we were like really falling off. I knew we were going to have a short-term bounce. And so now we're seeing some of that bounce. I'm going to start selling into that momentum in my own portfolio, raise more cash, and then it's a wait and see again, back to what I said before. If we continue to go to all-time highs, maybe I deploy that cash in different, growth at fair value. Or maybe we get more defensive if we break below. But Katie, how are you thinking about the idea of like sell the rip right now? Is it something that is interesting to you, or are you more in the, dollar cost average, maybe buy the dip? How are you sort of thinking about that?
yeah, I probably fall on the latter. I was gonna actually ask you though, how are you determining of the gains you're taking? What percent are you trying to put back into cash to redeploy, and how do you determine that amount based on where we're at right now? Because I think it's a good opportunity for people to hear through your thought process of, given we don't really know, do you have like a target percentage or a cash amount you're trying to take out from over here and put back over there? And how do you determine how much that is?
It's a super good question. So how I've thought about this is I have been dollar cost averaging into, let's call it, a dozen or so of these like high octane growth names since the bottom of 22, start of 23, right? Somewhere in that range. And most, if not all of them, are up 2, 3, 4, 5, 6. I think Hims was my first 10x. It was up 1,000% at the total right there at the very pico top. Of course, I didn't sell it. No one should have expected that. But what I'm saying is now I'm looking around. I'm like, okay, great. There has been sort of a change. The clear trend of up and to the right with the S&P 500 and the Nasdaq is not there anymore, right? We had a clear trend up and to the right from the bottom of 23. We had a flash sale on August 5th of 24 because the yen carry trade, but that was a flash, and now we're back up to the right. But now things aren't exactly trending up and to the right anymore. We're sort of in this like wait and see. We're below the 200-day moving average, right? There's a lot of clear bullish trends that have been broken. And so, in my opinion, that means, okay, maybe it's time to get out of some of the highest risk, highest octane, crazy volatile names in my portfolio. Take those, not exit them, right? But take the profits off the table and then raise cash as I get ready to see what's around the corner. For me right now, I think there's a lot of opportunity in China. I think there's a lot of opportunity in just like international markets. We've seen the strength that's gone on with KTech, the ETF KTEC. It's the what's it called? Like essentially like big tech Chinese internet names. We've seen the same thing with FXI. We've seen a lot of strength going on over there. Maybe some of this cash in the same vein of high octane growth risk gets reallocated to something like that. But when it comes to like a mathematical formula, I don't really have one per se. But what I do think is important is to know two things. One, it is always okay to sell in a profit. You don't have, no one can time the market. Hindsight's 2020. Don't ever feel bad for not being able to time the pico top of a perfect stock. Take some profits along the way. And when you do take those profits, reallocate them in a manner that is on the same wavelength as it came from to begin with, right? So if I'm taking, in my opinion, from some of these high octane growth names, I want to also deploy it in the same sort of beta, if you will, location in the market. So again, K-Tech, FXI, some of these other names over there that have seen a lot more strength. Maybe cryptocurrency. Who knows? We'll talk a
Yeah.
little bit about that here soon, I'm sure.
I definitely want to get into crypto, but you seem pretty bullish on China and Shy. That is not, I'm not trying to start anything here. But I'm sensing there's some disagreements there. So I guess, Austin, your conviction for China, what's that based on? I guess, Shy, what's your response to that from your point of view?
In my opinion, I think it's a catch-up trade. That's why I'm thinking about it, right? I think China, AI, tech, all that has been lagging for so long. You go look at Alibaba stock, you go look at Baidu, you can look at all these, internet names, and they were absolutely, from a valuations perspective, lagging the markets, the worldwide markets, especially the S&P, for years, if not, a decade now. And so, in my opinion, I think as we begin to see if it's DeepSeek originally that sort of spurred up some of those conversations of, wait a second, maybe they are something to look toward. Maybe there are something to study in and look more into. I think, in my opinion, it's the catch-up trade, and it is not. I have no visibility into China, right? And that's what's so important too for people to understand with their own portfolio construction. I'm a big believer. Invest in things that you understand and that you know. I've never been to China. I've never got something from Baidu. I mean, I've been on Alibaba's website. I've read some reports and stuff, but I know much more about Amazon than I do Alibaba. And so what I think is so important is like risk adjusted returns, right? If we're going to be risky, let's find risky spots, but let's also make sure we're not over indexed from a portfolio positioning, weighting perspective to something of that nature. And I just think catch up trade makes a lot of sense this year for China.
Shy,
I
your
mean,
thoughts?
for me, it's not. I disagree. I'm a thematic investor with a 5+ year outlook on my holdings. China's rentals. It's a rental. It's not like people aren't going to be holding it for more than a couple years.
Totally agree.
Like what Austin's saying, like, it's a catch-up trade. I agree with that, especially with all the poker game being played in the U.S. right now. It makes sense, like for China to catch up. But for me, like, it's just time horizons. That's end of the day. That's what is different between Austin and I's strategy on China, where Cloudflare wasn't cheap when it added like past couple weeks. Axon wasn't cheap when it added past couple weeks. I don't know, but those two companies have monopolies in early sector growth themes that have the makings of being a mega cap one day. I don't know when, but I just know it's going to be a mega cap one day. And I want to take advantage of this macro driven pullback to add to names I know I will be holding, hopefully forever, probably not, but at least for next like 5 years. And China just isn't, it's a rental, it's a trade. So I think I'm curious what your take is on that, Os, but that's kind of what my response is to your
No,
China.
it's and people are wrestling like all the time. I see people are like Austin, Robert. We have the Rich Habits podcast, and we always tell people like how we are so bullish on American exceptionalism and American capitalism. Like, go buy the S&P 500, go buy the Nasdaq, go buy these tried and true index funds and ETFs that we know over a long period of time are going to continue to trend higher. And people are like, why aren't you guys 30, 40, 50% in international stocks as well? And you zoom out and you look at the last 10, 15, 20 year, I can just pull it up right now. FXUS, I believe, is the ticker. Total International Stock Index Fund here by Vanguard. The 5-year return is, total return of this fund is 66%. I'm sorry, 85% compared to the S&P's 150, right? So 10-year return is 66 compared to the S&P's 230. And so, like, to your point, Is now a good time to be international? Yeah, this ETF is up 9% year to date, which is way outperforming the S&P 500, but it's sort of it's for rent, right? It's cyclical. It ebbs and flows. Right now it's flowing. I don't know when the flow will turn to an ebb. Honestly, I don't even know if an ebb or a flow is a good or bad. I
Mhm.
don't know in that phrase what's good or bad, but y'all know what I'm saying here.
Yeah.
And so I think when it comes to China, it's a very similar story. Ebbs and flows, you're renting it, and right now I'm betting on that rental being more of a, and it has shown to be that more of the flow when compared to the S&P 500 from a total return perspective year to date. And that to me is just an interesting way to reallocate capital from some of these biggest high octane winners in my own portfolio with a similar, risk adjusted return beta, type outlook there.
Let's go off the metaphor tangent because I love metaphors as well. I just thought one as you spoke to that. So like, let's say your car broke down. The car is a U.S. equity market. The tire popped, and you have a spare tire in the back. You put the spare tire on just to get you through from point A to point B. The spare tire in this analogy is China, and a car is the U.S. equity market. You're not
I
going to
love how
continue.
you just used you just compared probably what's going to be the largest economy in the world to a spare tire.
As an investor.
It's so
No, you're so right though. You're absolutely right. You're
It's a
absolutely
good,
right.
yeah, it's a good analogy. Love that. So, Austin, you brought up American exceptionalism. I want to talk about a space America would like to be exceptional at, but we're working on, and that's the crypto space. Um, Bitcoin. Sounds like you're bullish on that one, but Shy and I haven't talked about crypto in a couple of days. So, what is your assessment of the state of things? It's been kind of a weird quarter for crypto, I would say.
It's been really weird, and it's kind of like in the like we don't have to get political here, right? But it's just like I kind of wish that Bitcoin remained that thing that governments never really cared about, right? So
Mhm.
like, and I'm not just saying with here in America, obviously there's governments all over the world that are like, putting their stamp on it and buying it and holding it or whatever else. But it's just like it's become, I don't want to say manipulated, but there's just been a lot more to have to stay up to date with this asset class as the president of the United States talks about this or that or whatever with it. So it's one of those things I'm just like, ugh. But yes, I own a ton of Bitcoin. I started buying a bunch of Bitcoin back at the beginning of 2023, around like the 25 to 35,000 per coin range. I've begun selling my Bitcoin. I started selling I think I've sold about 25% of my total holdings between 85 and $90,000 per coin. Um, I I now see Bitcoin is back in that sort of 200-day moving average range. Yesterday, when I was making some notes here, it was above the 200-day moving average. I want to say it's still above it right now, but in my opinion, I don't think the bull market's over. I think that we'll continue to see Bitcoin either shoot for what might become a new all-time high or make a very clear lower high, which can then be our clear, hey guys, see you later, it's done. But I think we're going to have one more good push with this asset class over the coming weeks and months. Maybe it's a summertime lull. Maybe it's after that. But I don't know. I'm optimistic about Bitcoin. Again, I still hold a ton of it. I'm talking like, I don't know, well over 150, $200,000 of it. So it makes up a big portion of my portfolio. I love some good cryptocurrency here. It's done really well for me. And again, though, it's never been more important, at least in my sort of perspective here when it comes to stocks and Bitcoin and crypto or whatever else. Don't feel bad about taking profits, right? Every single person listening right now, I'm sure, has like done that thing where they look at their portfolio at the very pico top of its value, and they're like, "Oh man, if I only sold everything back then, I would have all this money, and now I'm down, however much percent from the pico top." You can't think like that. No one is ever going to be able to sell their portfolio. You weren't even thinking about selling it to begin with, so stop even thinking about or comparing yourself to, what could have been, what should have been, and just have a plan, right? Say, hey, for my plan, for example, Katie, Bitcoin goes to 100,000, I'm selling another probably 10 or 15%. If we see, 105, 110, 120, I'm going to continue to sell into that strength. I plan to be 80, 90, 95% out of my total position if we, see up to the 120s, 140s,
That's
which I think
my
would be
question was, are you
incredible.
adding any at this point?
I don't think I am right
Okay.
now. And that's not because I'm not like bullish. I very like if someone's like, "Hey Austin, should I buy Bitcoin?" I'd be like, "Hell yeah!" Like allocate maybe 1 to 7% of your portfolio to some Bitcoin and hold it for the next 5 years. Like I think that's a great investment strategy. For me, I've been so over allocated to the asset class over the last 18 to 24 months that now I'm ready to start cashing in on that patience, cashing in on those early investments, and reallocate that capital elsewhere in a much more predictable and non-volatile way. It's been crazy having to go up and down with this stuff. It's just been wild. I'm ready to just park it in like an SPYI or something and collect my monthly income from that. But speaking of cryptocurrency, Ethereum right now is really interesting because and this is so frustrating because I think a lot of retail investors, including myself, have made this mistake where they think altcoins are Bitcoin. So when Bitcoin goes up, right? They think, oh, my altcoin portfolio is, of course, going to go up too. I'm going to go make all this money with my altcoins. When we're just talking about the ebbs and flow, Shy, altcoins, I would argue, have a similar story, right? Bitcoin can continue to trend higher, go up and to the right. And then only for a very short period of time, sometime during a bull market crypto cycle, call it 6 to 12 weeks, will we experience what has historically been called the alt season, where Bitcoin kind of hangs out a little bit and it stops going up dramatically, and everyone's altcoins just get all this capital inflow. And we've yet to see that, in my opinion. We've yet to see that, especially with Ethereum. Ethereum is under its 200-day moving average. They're trading at levels, or it rather is trading at levels we haven't seen since like 2022, so not that great, very long time ago. And we're just talking about the Trump administration and what's going on over there. I'm pretty sure with their World Liberty Financial coin something, they're holding like $500 million of Ethereum on that balance sheet. So something's going on here. I think Ethereum's worth looking into, worth owning at these levels. And I would argue that as the Fed continues to stop quantitative tightening, because we saw that they slowed that down even more over the last week or two here, and perhaps even begins to expand their balance sheet via quantitative easing, depending on what the economy is doing. I think Ethereum has some room to grow. It might not be this year. It might be next year. It might be not during the predictable 4-year crypto cycle. But to me, it's very interesting. So I've got about gosh, I don't know. Let me pull it up here for you guys, because I hate it when people talk about stuff and they aren't transparent about how much they
Yeah.
actually own of it. So
Well,
I've
while
got
you're,
about
oh, go ahead.
I was just saying I've got about 25 Ethereum, so I'm rocking and rolling. I hope it continues to go higher. I'm invested. Same thing with Bitcoin. I've got some Bitcoin, and I've got a long-term thesis more on the Ethereum side, excuse me, and the altcoin side. But when it comes to Bitcoin, I think they're completely separate. Right, we just talked about the sort of ebbs and flows, international versus U.S. stock market, just how they're very separate. I think they're very separate as well. I plan to take some profits with Bitcoin here very soon and continue to do that. I will not, at least it'd be great if it goes up, but I don't expect the same bullish thesis with some of these other altcoins in the near term.
Yeah, and Shai, you've reiterated, you're TradFi guy, but do you own any crypto, or do you have any positions currently, or that's not your bag?
I own one Ethereum coin. Bought
Nice.
a long time ago, and I think I own like $2,000 or $3,000 only of Bitcoin. So like, to answer your question, no,
Yeah.
I am not that. Clearly, that's such a small position in my
That
portfolios.
Yeah.
surprises me so much because you're such like a high octane, risk on, long term vision, like growth investor. And I would have just imagined like you would have seen Bitcoin, have done these boom and bust cycles, and you're like, this has got to be the bottom, or like I'm excited for the next leg up, or I don't know. That's just so surprising to me.
No, I get that all the time. Again, it goes with my mentality of like, I think it's more of a rental because of the ebbs and flows, and the bear markets of crypto is brutal,
Oh, so
and
brutal.
I just don't think that we have the stakeholders in place to actually change crypto for what it needs to be changed. It's going to take a lot longer than people anticipate. It's not going to happen in years. It's going to happen potentially in decades. You may make the argument fine when that happens. It's going to be 2.5 million Bitcoin the price. That could be the case. Absolutely. I just think that until I see actual applications in my everyday life where I go to Starbucks by using crypto to pay for it, buy now,
Well,
pay
you could say
later.
the
Or
same thing though, and I'm not going to get into a crypto, philosophy discussion here, but you could say the same thing with like stocks. Like I'm not gonna I'm
well,
not gonna
stocks have
pay for
fundamentals.
my
That's the difference, though. That's the issue. Like
is
they have
what?
stats. They have fundamentals. They have stats to back up their
Oh no, no, no,
valuation.
no. I'm just saying about the idea of like, I'm not gonna buy my Starbucks with my Apple stock, or I'm not gonna buy my Starbucks with my GLD or my SLV ETFs. But like,
Well,
it's still like a store of value.
no, it's a good call out right there. But technically, I mean, yeah, I will say, crypto is a commodity. It's an asset now.
It's a
It's
commodity,
an
yeah,
absolute
100%.
asset.
It's
Yeah,
not a currency. They named it incorrectly.
yeah. It's an actual commodity. That became as big as the silver and the gold. Like, come on, like it's here to stay.
Yeah,
Absolutely. I just think not the chat GBT moment, but like wow, it's entering permanence for consumers. Like I'm waiting to see that kind of avenue where, like you mentioned, like the stocks, like you're right, I can't buy like products with like, oh, I own Snowflake shares, like let me buy this with my Snowflake shares type of thing. It's just like there's a belief that's required to become a crypto investor, and for me, it just never itched me. It just didn't give me that itch. For
yeah.
some reason, it's weird. Like
All
I
right,
don't know.
crypto Twitter, you gotta attack Shy.
Help convince me. Help convince me because I
Actually, I
have
wonder. Oh, go ahead.
no, I have boys who are obsessed with it, and they're
Yeah.
telling me like that's the reason I own $5,000 of crypto because they said like I'll stop talking to you. It doesn't make sense. Like
Don't
you
worry, man. I'll
are
never stop talking to
no no
you
no.
for
It's
for
a
your
clearly
lack of crypto
it's
conviction.
a joke from them, but like I totally get like they're like if it becomes true like what's 5K gonna cost you and like they're right. So like
Yeah.
I might as well have it.
I'm kind of with you, Shy. Me, it's like definitely a psychological barrier where I think I'm just bitter. That like I had some and I sold it, and now I'm like, ugh, I don't want this to do well because everyone like, and I know deep down, and it's just like the longer I wait, like it's for me though, it's like I'm kind of like I'm being a little petty. But we got a couple minutes left, and I know there's one topic that everyone was talking about this weekend, which was Saratoga bottled water, and they are part of a publicly traded company called Primo Brands Group, which had like I think early in the trading session yesterday spiked, or maybe they spiked pre-market and then immediately went back. I thought this was funny to watch because you got to be like the IR team sitting over there, like what the hell's going on? Because there's no way they're on TikTok. Um, what do you what do you guys think of these cultural moments that like lift these assets, whether it's an altcoin or a stock, into like are there opportunities there if you're someone who's very fast and speculative, or is that just you're playing a losing game?
I love when there's a cultural massive moment where a lot of people are doing something new, adding something to their routine, or talking about it, memeing it, whatever, because I love that. And there's a trade on the other side of it, right?
Mhm.
And so, like with Primo Brands Corporation, PRMB, and the Saratoga Water, I'm not going to argue that there's a trade on the other side of this. Yes, they own Saratoga Water. I think I saw Chris Camillo talk about how Saratoga Water is doing like 1 to 2% of their annual revenue. So
Yeah.
it's not going to be a needle mover for the company. If if they doubled their sales, like cool, our revenue went up an extra 1 or 2%. But there are absolute instances in the past, and they will continue to be in the future. I think just like general themes here are like Hershey and Feastables. Hershey stock was down 50% back in, I think it was like 22 or 23 after Feastables took over the world with Mr. Beast. Crocs, that was a big, just
Mhm.
boom back to the upside during COVID. Their stock popped off like crazy because of the Hey Dude things. Like there's a lot of instances where like culture
Mattel stock,
shifts.
Mattel stock
Yeah.
the year Barbie came out. Yeah.
Exactly, exactly. Like there are these things that happen, like culture and like stock investing, when they really do collide. I don't know if this is one of those opportunities. I might roll the dice and see what happens because like why the heck not? Maybe everyone goes by Saratoga Water and it's going to get positively reflected in their Q1 earnings. Because obviously we do have 5 days left where they could see this spike. But it's really hard to tell. It is though something I really want to encourage everyone watching to keep an eye on, right? If you see something, and I tell my girlfriend this all the time, because she's on like the TikToks and Instagram and she's seeing like culture in real time. I'm like, if you see something happening that's like making you say, I'm gonna go buy this, you tell me what you're gonna go buy. Tell me what you're going and doing so I can figure out if they're publicly traded so I can see if there's a trade there or not. It's just
Yeah.
so cool. And I think like this idea of like social arbitrage investing that was pioneered so well by Chris Camillo is such an awesome way to get people to understand what investing really is, right?
Yeah.
Understanding how these companies make money, and hey, if I see that they're making money, maybe I should go invest in that company too, because if they're buying it and I'm buying it, who else is buying it?
Right. Yeah, Shy, you a big Saratoga guy over there? What's the
I
green
actually
bottle
do
you
drink
guys?
Saratoga all the time.
Really?
Yeah, I do. It's because my fiance is in the nightlife space in Hollywood, so like
Okay.
they drink that stuff bottles all the time. But I actually just found out about it yesterday afternoon. Like I'm clearly a geezer when
Yeah,
it comes
you're
to these
in like
trends.
you're
Yeah,
in
dude.
some weird you're just in the fundamentals. You're just doing the work. You have no idea about the group chat, no idea
Well,
about Saratoga.
people are surprised. Like Twitter's my only social media. I don't have the gram. I don't have TikTok. Like
Dude, you need to be
I
on
like
TikTok. I
being
feel
off.
like you'd enjoy some TikTok.
Yeah, you're right. It might be my operational efficiency in my brain where like I just don't want to go down that path because I'll become addicted. It's like
Yeah.
I just don't want to get through that noise. But you're right, I should. Like I'm so behind on so many cultural movements, and I just looked up. I can't believe I had 600 million views. I just looked up the guy's Twitter. That
Yeah.
video. That's
Yeah, it's unreal.
nuts.
Insane.
It's a lot of people. And again, back to this idea of like now you can ask the question, are all these people going to go buy Saratoga water? Like
Mm.
the easiest way, so if you're at home right now saying, should I go buy stock in Primo Brands Corporation? You got to go do some due diligence, right? Shai's doing his due diligence by looking at the balance sheets, the income statements, and the statement of cash flows. Maybe your due diligence means going to the 7-Eleven, the Walmart, and the Walgreens to see how much of the Saratoga water is sold out and go do that for 37 more
Yeah.
of them and say, wow, maybe people are actually buying the Saratoga water and maybe I should go buy the stock. I don't know, right? That is just like, there's so many fun ways to get excited as investors. And you can hear us talk about moving averages. You can hear us talk about fundamentals. Sometimes, social arbitrage investing is what gets people, fired up. And it doesn't matter as long as you're investing. That's the most important thing here.
Yeah, I agree. That's such a good point and an entry point for so many people. Austin, we hope you come back so soon. It was so good to see you. And thank you so much. Thank you, as always, to Shy. We will be back tomorrow, 9 a.m. Eastern, as we are every day, to figure out what fresh updates happen in the next 24 hours. So thanks, everyone, for tuning in, and we will see you next time.
Thanks, everyone. See ya.
Yo.